Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Tuesday, August 29th, 2023. Quite the day today. I'm going to jump right into it. I'm beginning here with the S&P 500, and I'm starting on the 4-hour chart. As I spoke and alluded to yesterday, a break above 44.84 would bring about one of the alternate views, and that being that where I had marked minor wave 2 was actually going to be minute wave A of minor wave 2. And then we got the B wave down, and that was minute wave B of minor wave 2. And now we're in the C wave of minor wave 2. So again, if I put in my first levels for retracement, and I just stick them right on there, you can see that we basically just have surpassed 50%. So the market has regrouped or recouped 50% of that initial decline off of the 46.34 high down to that 43.50 low. So that I'm remaining right now is minor wave 1. We're in the process of putting in a C wave to complete a minor wave 2. Now, let me get this all together, and then I will also go over the additional alternate count which remains out there. So, being that our normal retracements for a wave 2 are 50 to 62%. We've surpassed the 50, that brings us up to the 62%, and that's 4525.82 or 4526, or even just above and below, plus or minus a little bit in either direction. Excuse me. Now, what I need to add, I can add one more layer onto this, and that is we can now compare the C wave to the A wave. And for that, we do use extensions. So we go from there to there and bring it back down to here. And now we have our extensions. First one, a C equals A, that's been surpassed. So the next one that kind of comes up here is that C equals, first of all, we have the 618 at 45.25. But if we're sticking with the C wave, the next comparison one comes at 1.618, where wave C would be equal to 1.618 of wave A. Not saying that it's going to go to 45.83, because then it has to break above both of these resistance levels for the entire minor wave 2. So it's going to really depend on structure. But if we're doing all the fibs that we can connect to this minor second wave, we need to include these numbers. So now what's going to become more important here is, of course, the structure. So best as I can do, I feel either have 1, 2, and this is 1, 2, 3, and then we got a 4, or it's 1, 2, and this is 3, 4, 5. This is the third. We get a 4, and then we get a 5. So we're going to be looking at the structure. I'm going to break this down to the hourly, and we're going to go back inside. And so we can get 1, 2, 1, 2, 1, however many 2s we got. I think we fulfilled them all today. But just this solid buying. And again, really what we saw happen today was, again, a reversal of that dispersion trade. Selling volatility in the index and buying volatility in the components. And that's pretty much what took all day. And it was just a straight walk up. And pretty much really from the opening, they started buying it, and there was no stopping it. We saw tech totally recover. But once again, Tuesday, what happens a lot of time on Tuesday? We get a lot of asset managers coming back in, reestablishing or just changing or just doing things that they feel that they need to do. So after the jolts, maybe they already had the orders, or there was another something that triggered that they need to re-enter and build up positions within the tech that basically was getting hit pretty hard all during this decline and this decline. Now, we did see Apple up was actually up over $4 during the day, and will, once it starts trading again, be up $4, over $4 again. We had NVIDIA up over $21 today, ended up closing down a little bit, and is now being quoted a little bit lower, which is okay. Tesla up $18 or $19. So, Microsoft, which actually started the day lower, up almost $5. Meta, up $7.75, etc. So we saw this mad influx of new capital or old capital or just capital back into the tech sector. So up and away we went. It's very fitting for the personality and the characteristics of a second wave. And what we're seeing truly fits even a C wave, and that they're just quick, they're fast, they're powerful, and their closest cousin is going to be a third wave. So, and that's what we would look for in the third wave, but here we got it coming in the form of a C wave. So there's still some additional to do. I cannot count a complete 5 waves up. So we're going to be looking for that. It could happen overnight, could happen during Globex, which sets us into a position of once again confronting where we could have a nasty turn. Now, appropriate time. The additional alternate view, which I continue to put and carry on the cash market. So I'm just going to flip over to that cash market. Here's the 4. But again, what I'm going to be really thinking is that these are 3, and this is 3, and this is going to be 3. So what is, if it is a minor 5th wave, which would be expected to go above 46.34. So let me go back out to that 4-hour chart and let's take a look. So what are the possibilities of this market? Well, here is our 5 to 4. One equality as at 45.65. This is 46.34. No, actually cash market 46.07. So all it needs to get is above 46.07 and the wave count to be solid. Now here again, 3 waves. 3 waves. ABC. Of what? Questionable, right? Drop it back down to the 1-hour chart. That on the 4 hours pretty clear as ABC. 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 So is this the third? And maybe we all in the C wave, we got 1, 2, 3, small little 4, we get a 5. Maybe we do get up to 45.15, pull back again, and then rally up, but pull back in 3, and then rally back up in 3. So, and I kind of could happen very often in a completing 5th wave, and that's what this would be. It would be a minor 5th wave to complete the intermediate C, to complete the primary B wave. It forms a diagonal. So we're going to be watching very closely. Again, I'm not calling it that this is what's in play. We're running them side by side. As I have said before, we need to allow, I'm going to go back over to the S&P or to the futures market. We need to allow all of this to play totally out and to be negated. And unfortunately, right now, it's going to take a whole lot more to the upside. And a break above 46.34. Now, again, people are going to say, well, that's useless information, et cetera, et cetera. It is and it isn't. I'm giving you the technical picture. I do not make recommendations for positions. I do not dictate what positions could or should or would be put on. I do trade within my trade room, but I am not giving out a trade. People can elect to follow me on a trade. But again, I do not make trade recommendations. One other thing that I also want to add is I welcome comments. I welcome people giving and sharing their wave counts. I welcome people that want to just discuss about one count versus another count. I even don't mind people telling me that they disagree with my count. That is optional. I don't expect everyone to always agree with my count. But here's where I draw the line, and I'm very opposed to: righteousness and indignation. If somebody's just going to say, you're absolutely 100% wrong, or, geez, you should know this already, stuff like that, that's arrogant. And that's unwarranted in the forum which I'm trying to create on YouTube. You can disagree with me. You can challenge the count. You can show your count. But as far as like trying to show your superiority, whatever, against mine, that's like, I mean, even that's okay. I just, in my own channel, not welcomed. So again, I'm just going to ask people, let's all be adults here and let's respect each other. I will respect your count. I will respect your analysis. I may not agree with it, but that's okay. We can still have the discussion. So back here in the S&P, I don't think upside is over. But then again, what they're giving all the credit to today was the JOLTS report that came out at 7. But this buying actually began before, 10 o'clock, 7 o'clock Pacific. But this all started before that time. It really started right before the opening. So whether there was people taking a long shot on the JOLTS or just had a feeling or et cetera, whatever the situation may or may not have been. Now, so we have tomorrow, we've got some additional. And let me just go over what they are. Tomorrow we have the ADP employment. Now that comes at 8:15 a.m. So this is well before our opening. But again, if it's going to come out basically reflecting what the job openings did today, because they came in way under. There weren't as many job openings as they all believed there would be. And what we're seeing in the ADP employment is that the median forecast is 200,000 new jobs versus previous being 324. So if it comes in worse than that, then I believe that that'll create an additional spike and there'll be more plowing in and just like everything's rosy and cool. Inflation is under control because more people going back to work and more jobs being filled produces wage inflation, et cetera, et cetera. But I think that we really need to keep things into perspective, putting it into the right place. So yes, algorithms are going to act and react the way they do. Yes, a lot of traders are going to react the way they do. So here's what I do. When these numbers come out, I know what my Elliott count is. I know what levels I have to be. But again, I want to reiterate, I am a day trader. I was an options market maker for many, many years. And during that time, I carried positions. I carried large positions, but rarely was I totally tilted naked long or naked short. You can't do that as a professional trader because you'll lose all your money within your first week or first month or whatever. So everything gets hedged. So again, when I'm day trading, I don't just go in and say, well, I disagree and I'm just shorting this thing, which if I would have done that on the opening, by the close, I'd be down $100,000 or more. That's how big the moves were. So again, I trade the price action. I trade what's in front of me. And I'm suggesting that I know that a lot of people, if you're a position trader, it's much tougher to roll a position. So you write it out. But there are different things that you could do. And if you need more explaining, then maybe you need to talk to somebody who specializes in options trading, an options trading broker, someone that could help you design or put on a trade that effectively takes advantage of premium, but at the same time is hedged. So you're collecting the premium, but you're not out there on the limb in terms of a trade going against you. So I would think that we have that ADP report. We also have the GDP, the revised number at 8:30 Eastern. And then we have pending home sales at 10 a.m. So all of the GDP revised, all of the inside the trade balance, the retail inventories, wholesale inventories, those all are revised as well. So that will likely be a market mover. Thursday, big, we have initial jobless claims. So again, we're dealing with the jobs. And we have PCE, which is dealing with inflation. So again, we've got these things. And then Friday, we have U.S. non-farm payrolls, and we have the unemployment rate. And then we have the S&P U.S. manufacturing PMI, the final, construction spending, and ISM manufacturing. So Thursday, Friday, pretty packed in terms of both inflation data and the jobless and jobs data. So we're going to get some movement, and it could be in either direction. That's why we have an alternate count. I'm telling you, here's the breakpoints. The alternate count kicks in if we break above 46.34. Why? Because if this is labeled as minor wave 1, minor wave 2 cannot exceed the starting point. Therefore, it's not a minor wave 2 if it's going to correct more than wave 1. So that in mind, that's the break level. We're pretty well, we are pretty far away from it right now. We're about 125 points away from it right now. Stranger things have happened. We'll find out. But again, I want to reiterate one more time, the alternate count is just showing an extended wave up to complete that primary wave B. It holds the same consequence once it's complete, that we start a primary C wave decline and we do it all over again. Okay, hence that's why I've been keeping that alive, because we've not cleared all of the levels for the net. If this were to turn and we start and we break below 43.50, then it's going to be 1, 2, and we're heading down in 3. So again, how do you want to trade that? Carefully. I can trade intraday, so I can catch all the moves as best I can. And that's the difference. If you're positioned short from here, looking for down, what's your exposure going up? Where do you need to adjust? These are your decisions, not mine. All right, over in the NASDAQ. Same story. But it took a while, but it did finally break above 15,414, which was that high on August the 23rd. Actually, it didn't. Where's that high? 15,418 on the 24th of August, so last Thursday. And then it just dropped like a stone for the balance of the day. So are we going to run up here and we're going to create a new high and then perform, then do the same thing? It's very possible. I gotta say, it's very possible. That's not what I'm calling, but if we're getting up to the top of a C wave and I'm going to put a minor wave 2 on top of it and we start to come off, as I said yesterday, and I will repeat again today, your signal that the wave 2 will be done is we drop in this type of a fashion. This time it would be an ABC. So it even stands more of a chance that it'll just keep going. So that's going to be one of the signals where it just breaks down, all of these levels are rejected, and we just start to drop. So it just happened to stop here and then started to rally again. And now we're getting a clear understanding. Oh, well, okay. A of 2, B of 2, we're in C of 2. Now, moving averages, everybody got to participate today. Everything got caught up, right? Everybody's back above the 200. So this rally was powerful enough to swing the moving averages all into alignment on the 1-hour chart to continue to go higher. Taking a look at the daily chart, and this again on the NASDAQ, we saw everything come back into line. Now, what we do have is right there. And that did hold at first, and the 15,329 was where the 50 SMA, the daily 50 SMA, got broken, closed above, and now is even trading now, reopening above that level. So indicating we have continued upside. So again, A, B, C, and there was the bulk of the B wave. So I would suspect if this is true, and this is going to be this ABC, then if we start to come down again like this, there should not be any specific barriers or blocks for it to just continue and eventually break 14,609 and keep on going in a third wave. So back down to that hourly chart, and let's just take a quick review of what we have going on. If I then now put in, which I did, here we have equality. Wave C would be equal to wave A at 15,560. It's a really nice level. Adding to that small cluster is 0.618, and that would be a Fib retracement, where minor wave 2 would be 0.618. It will have retraced 62% of minor wave 1 at 15,507. So they're in the same type of an area. Above all this, we have the 78.6 level. Should be pretty topside for a wave 2, but possible. And that sits up at 15,751, 752. So all of these are plus or minus. You know, again, fibs can be hit right on the nose, or they can get in the area of, and, you know, make their turn or whatever. So both S&P and the NASDAQ continuing to appear to need additional upside. We've got the fibs, the retracements and the extensions both showing on an extension level. The S&P's got a little bit higher levels. Doesn't necessarily mean that that's where it's going to go, but these are the fib levels that we equate to the move. All right, I am going to finish it up right there and wish everybody a very good evening. And thank you for listening. And thank you for at least hearing me out on the YouTube channel, on leaving comments. And our next update will be on Wednesday, August the 30th.